Good morning, all. CamelbackTrading.org coming to you this Thursday morning, July 16th. And we are looking at a market profile here on Window Trader. And I'm going to explain what you're looking at in a minute. I decided to do this because after the close last night, I saw something. And I think it puts into perfect perspective what we're dealing with and who we're trading against and how the markets do trade. So this is, and I have it in one tick increments, this is Goldman Sachs' first half hour of trading yesterday. And I'm bringing it up because obviously most of you know I was a specialist on the Florida Exchange for 25 years. I worked for Goldman Sachs. And to put in context of what's going on, this is one of the largest banks in the world. They gapped the stock open by 5% yesterday, and then it came in 3% in the first 30 minutes of trading, and came in almost the entire range they opened it up in the first 2 hours of trading. And the reason I'm bringing this up is when we used to have gap openings on a stock, if it was a bank stock, if you were going to move the stock, I believe it was 2% at the time. You didn't need a floor official or a floor governor. You needed a floor director, if not one, maybe two, to move a bank stock. 2%. To let a bank stock, one of the largest in the world, and it doesn't matter if you like Goldman, hate Goldman, the bottom line is it's one of the biggest companies out there. But to let it open gap higher by 5% and come in 3% in 30 minutes is a no-no. If we moved a bank stock 5%, we damn well better have supported that move, whether it was to the upside or the downside. Otherwise, we would have lost the stock. The CEO would have went nuts. Your customers would have went nuts. Picture the people who bought this. So all this time, I always admired engineers, doctors, firefighters. I always said they did something. And I always felt all I did was, make a market or whatever. But after seeing this, now I know why we were called specialists as opposed to market makers. We were specialists because we specialized in making markets. We provided liquidity and dampened volatility. The stock might still go up or down. But the bottom line is we were there to to provide a function to make it an orderly market, which helped our companies, which helped their client base, which helped the investors. What transpired yesterday in Goldman Sachs is the ultimate disgrace. And the reason I'm saying this is if this could happen in Goldman Sachs, just wait and see what's going to happen in Tesla, Amazon, Netflix, Google, you name them. That's why there's no more market making. That's the biggest false narrative out there. Just look at this. To put it in perspective, here's your opening in Goldman Sachs yesterday. It closed the previous day at 214. It opened at 224.37, up $10.37. It went up another dollar. And then here, look. You want to put it in perspective? Look at this. This is only the first half hour of trading, people. Look at on the side. Look at the price points on the side here. Right? We went from up to 225 and change all the way down to 215.18. There you go. Here's A period's low. Then B period opened. They let it up again, about $1, and then look what they did. Came straight down again. This is the first 4 hours of trading, my friends. First 2 hours of trading. It held the gap, but after the first 2 hours of trading, it barely held the gap and then traded sideways all afternoon. If I had let a stock up $10 and let it come in $6 in the first half hour of trading, I no longer would ever be trading that stock again. Just to put things in perspective on what's going on in the marketplace today. I think it's important. Now, let's go to where we're trading today. And they don't do much better job with SPY either, the S&P 500, the way they whip that around. So I took up a lot of time, so we're just going to go over some things quickly. So yesterday, we gapped higher, right? After the third price probe in a row, we gapped higher, but the gaps all filled. We rallied late in the day, but again, we failed failed miserably at the top of an 8-week balance. And now today we find ourselves trading at the bottom of yesterday's range. M period from the 14th is going to become very important again, right? We say that all the time. If we get accepted below yesterday's low, right? Yesterday, sellers were rejected yesterday. That's a huge price probe. Sellers were rejected yesterday, and we traded back up. We had 10 wide, which was going to be a downside destination. It looks like it's going to be an upside destination now. I'm not going to give you the price points because I give them to you every morning and afternoon. So if you don't have them, please look at last night's video. As far as a game plan this morning, well, right now we're looking to open in balance but below value at the lower end. If we take out yesterday's low, you're going to most likely test a good part of that M range and test the price probe all the way down to the 317.67 level. So any acceptance into M period, I will take a put play because you're going to have lower value and the odds get better with acceptance into there that you're going to trade a good part of that range. So if I take a put play and then we get accepted back into yesterday's range, then I'm out of it. If not, I'll work it on down and see if there's buyers again where there was a price probe. If there aren't, again, there's not much there. There's nothing to the afternoon pullback low then. Right? So very important. We have a naked POC. That was 8 wide. So I like 9 wide or better, but it's still a prominent level. So if M period range gets traded and the price probe is rejected, well, then you're going to most likely trade to that naked POC and the afternoon pullback low. So that's what I would be looking at if sellers are able to take control. If we don't take out yesterday's low or we take it out and quickly get rejected back in, I'm not saying I'd take a call play right away. I would want to see one time framing up and get back at least into L's range to get us back into yesterday's value. Those are early plays for this morning. Again, you're a member of camelbacktrading.org. Up to the second updates, what we're looking to do pre-market and throughout the entire trading day. Now let's go to the charts. Just quickly, weekly and daily. So the weekly, again, we had a chance, right? Nothing has changed until 323.41, last month's high, and the high of our 8-week balance not only gets taken out, but gets accepted above. If they can't do that, we failed at the top of the balance and will eventually roll over. Plain and simple, right? Same on the daily. We've popped our head 3 times above this balance and keep coming back in, right? Not yesterday's high, but let's say Thursday, Tuesday's high was 319.76. We're trading at 319.75 right now. Any acceptance back into that range, and again, you're going to start looking to trade to the bottom of it, which is 310.68. So bulls need to start defending this upper level here, or we're going to get a reversal. Good luck trading today. Have a great day. Come check us out at camelbacktrading.org, and we'll recap at 4 p.m.